Those made it.
Hi guys, welcome to the Forex tribe. This is a tribe of Forex bosses. Yeah, some of you who've been around for a minute may be wondering what's happening. There has been a logo rechange and a brand rechange. I realized that the previous brand is not going to be conducive to what I'm trying to build. So with the Forex tribe, I believe it's a brand that's more accommodative to many people from anywhere around the world. So welcome to today's video. Today we're going to be talking about multi-touch confirmation and how to differentiate between the difference to differentiate between a valid trade and a high probability trade. And one of the best ways to differentiate between the two is use higher time frames, and also to combine higher time frames with multi-touch confirmations. So we're going to get into the details on how to trade them, the kind of patterns, and we're going to get into the examples of in the chart patterns. So let's get straight to it. So as I said in the beginning, we are going to be talking about multi-touch confirmation and how to differentiate between a valid trade and a high probability setup. Right, so multi-touch confirmation is when you allow the structures, the Forex structures, to build over time and allow multiple touches on the support or resistance of those structures to confirm the reversal or continuation in which you are trying to to trade. In these two examples, we have reversal patterns. One is a channel, as you can see. The other is sort of a wedge, right? So the difference between the two, the reason why this one I named it a valid trade and this one I named it as a high probability trade is because of the fact that this one has two touches on the resistance side of the structure, right? And it has two touches, so two touches validate a structure and they validate a trade somehow, right? Sort of like the double top or the double bottom. And same thing here, where a rising wedge has two touches at the top and you may or may not decide to enter here and for the low and capitalize and there onwards. But the disadvantage about valid trades is that they are not high probability setups because it's only two touches. That's the difference between that and the next example, which is a rising and ascending channel. And as you may see, the first touch is over here, the second touch is over here, the third and last touch over there, way before going down. These three touches or more add probability, like they make it more probable to go in your direction. So let's go on the chart patterns so that we can see more practical examples of what I'm talking about. Right, on this example we are on the dollar index, the USD, the dollar index, right? So as you can see quite clearly, the market is in an uptrend like so. The market has been moving correctively, impulse, correction, impulse, correction, impulse, correction, impulse, correction, and then now we are in an impulsive phase, right? Those are the phases of the market, by the way. So let's go on the let's go on the 4 hour so we can further break this down, right? On the 4 hour, we see now the market has been moving rather impulsively to the high. We have an impulse correction, impulse correction, impulse, and then the market built a large structure, right? So before we saw this pattern here, let's imagine this part here. Let's imagine that this part, hold on, sorry about that. Let's imagine that this part does not exist at all, right? We have these two touches and these touches above. Entering here on the second touch here, when the market has now built this here, right? Before the market built what it continued to build here, but entering here, one of the reasons why I would say this is a valid trade is because of the fact that it has 2 touches. It's not 3, it's 1 and 2 touches. And it did go to the high. It did go to the high for about 100 and something pips, but it went back into the structure to go for the last and most probable touch, which is the third touch, which gives it also a higher probability. What happened here is what we call the evolvement of the market. Like, the market is evolving, it's morphing. It started off as some sort of a flag, some sort of a triangle, symmetrical triangle, and now it has built a bigger flag. That's something that the market does all the time. You don't have to worry about this. So with the market having evolved into something much bigger and then came back for the last touch, this setup here is a much higher probability setup, and as you may see, the market has been moving to the high and is still continuing to the high. So let's go to the next example for further clarification. Right, on EURUSD, I like using more recent examples. So as you can see, the market has been trading, or rather trending down. We have an impulse correction, and now the market is in a corrective phase. And as we go on the 4-hour chart, we see here some sort of a rising wedge coming from a large impulse, and now the market correctively moved and formed this here rising wedge. So the interesting thing about this rising wedge, which is something that I entered myself, was the fact that I thought that the market was building something similar to this, right? Similar to this right here, right? So I thought the market, it didn't make sense, right? It did not make sense. But for some reason, I believed that the market was going to reverse and go to the high, right? It was not until the market then came around here. It was around 2-3 weeks back, I believe, somewhere here, when the market started impulsing to the high, retracing, broke above, retrace, and started building what on the 1 hour we may see as another rising wedge. So it was a pattern inside a pattern, as you may see. There it is right there. So as it started building this structure and impulsing to the low, that's when I thought to myself that, no man, the market has now morphed into something else. It is no longer this structure, but now it has changed. And if we accommodate for the recent 2 touches, it makes much more logical sense. It makes much more logical sense if you build it this way. I mean, you could go and build the structure going this way, and perhaps call it a channel. Either way, you're not going to lose. But the point is this third touch, the first touch, second touch, third touch, and on the third touch we see now a rising wedge on the third touch. So it's the first touch, there it is, as you may see, the first touch, second touch, and then the third and final touch. We have this rising wedge. These kind of confluences, third touch confirmation, rising wedge, and in the rising wedge we have a evening star, right? We have an evening star and we have an engulfing pattern. impulsing outside of the structure. These kind of confluences show you that this is a very, very high probability setup. There's more probability for you to sell than it is to buy, and as you can see, the market has been moving rather nicely, giving you more continuation patterns to the low, and right now we are moving correctively, and we're going to have to see what the market is going to do from there forward. But the point is, the 3 touch confirmation is very, very powerful and something that you should be taking note of. And another thing that you should keep note of is the fact that the market can do what it did here. As you can see, the market came to the structure, right? Let me make it much more neat. Yeah, so the market moved to this structure here for the 3rd touch and induced people to the high, like 200 pips to the high. So your amateur traders, they thought this is a buy opportunity, we are moving to the high, like I thought immediately, but I didn't enter. And then I the moment now I started reanalyzing and I saw this structure, I was like, no man, the market is going to definitely retrace. Even in this structure here, this reversal pattern here, we have the 3 touch confirmation, right? Here's the 1st touch, here's the 2nd touch, here's the 3rd touch. So the confluences just keep adding up, the probabilities just keep adding up, right? So it's the 3rd touch on the larger structure, a reversal pattern on the smaller time frame, we have 3 touches inside the reversal pattern, and on the 3rd touch we have an evening star. I mean, come on, these are the kind of setups that you should not ever miss, ever. I don't care what your excuse is, maybe because of the fact that this was in the early mornings, I was sleeper, but around here it was 10 a.m. when I entered. I remember entering here, and I remember being kicked out. I think it was somewhere down here. Yeah, somewhere down here. These spikes kicked me out. I think it was this one or this one. These spikes kicked me out after how many, like 200 and something pips drop, right? So yeah, that's what I was talking about pertaining to like the 3 touch confirmation, and that will be all for EURUSD. Let's move on to the next example. Like I said, I love using recent examples, and a rather recent example is NZDUSD. As you can see, it is inside, or it was inside a channel, and then inside the channel we see another channel which is much smaller, and similar to the EURUSD, we see a 1st touch, 2nd touch, right? 1st touch, 2nd touch, and then an inducement to the high, and then a huge engulfing pattern to the low, right? To the low on the 3rd touch. So this one is another high probability setup that I should have entered, but I didn't. I cannot remember why, and I missed out on 140 pips, but it's fine because I capitalized on it on the EURUSD, so I'm not gonna cry over this one. But this is another example of high probability setups that you should not miss. Let's move on to the next example. On Aussie CHF, we see a channel rising, right? We have a rising channel, and inside the channel we see a rising wedge, right? And on the rising wedge we have the 1st touch, the 2nd touch, the 3rd touch, inducement to the high, and the market dropped. Now this one did not necessarily drop and break out of the channel and go all the way to the low, but it did in fact respect the 90% rule, and it did come to 90% of these pips here. I believe it's like yes, almost 200 pips, almost 200 pips. Yes, it did come down to 90% of that. So this is another high probability setup. It did not go further, but it did give you at least 90% of this structure here. And even on the trend line, right, the support level of the trend line, here's the first touch, second touch, third touch. Even if you entered here for a buy, you are not wrong, because this is a high probability setup. You know, there's a high probability of it respecting it because of the first two touches that have confirmed that this is a trend line that is respected multiple times. And if you have entered, if you may have entered here, you are not wrong. You are not definitely wrong, but I wouldn't have entered because I don't see any candlestick patterns here that would induce me to buy. But if I'm not mistaken, we have on the 1 hour chart, yes, we have a channel, right, on the 1 hour chart. So here's the reversal pattern that I spoke of, but outside of that, we have a channel going down, and we have a continuation pattern right here, like right here. We have a continuation pattern. We have a small correction and another continuation pattern before rising to the high. So that'll be all for Aussie CHF. Let's move on to the next setup. On the next example, we're going to be talking about valid trades, right? So the first example is the NZDUSD, where now the market comes from an ascending channel, right, an ascending channel, and then the market broke out and came back for a second test. When it came back for a second test, it gave us now a double top, and on top of that, it gave us a wedge, right? The reason why this is a valid trade, yes, is because of the two touches, but even if you extend it a bit, there's like 3, but then for the sake of clarity, let's keep it at 2, so that we don't make a mess out of it, right? The reason why this is a valid trade is because of the two touches, but it also makes it a high probability setup due to the fact that it comes out of this channel, came back for a double top formation, and then on top of that, it gave us a rising wedge. On top of that, inside inside the rising wedge, we have another double top right here, which the first one is here, the second one is this one. On the second touch of the double top, we have a evening star. All right, hence now the market did drop indeed for about 110 pips. So if you manage, the thing is, if you manage to find a balance between valid trades and high probability setups, you will never go wrong. You will never go wrong. Even this double top here was a high probability setup due to the fact that we come from a channel, and now the market has given us a double top. Now it did not necessarily respect the 90% rule, but it did give us a rising wedge and another opportunity to scale in, or rather to re-enter. And now the market did drop for 100 and something pips. So if you somewhat manage to find a good balance between valid trades and high probability setups, I'm telling you, it will improve your P&L exponentially. On the next example, we are on EURUSD, and we come from this falling wedge or a rising wedge. I'm not really sure, but it's a wedge regardless, and it continued impulsively to the low. And when we go on the 4-hour chart, we see this massive impulse and a rising wedge, right? So this rising wedge makes it a valid trade, but you know, it makes it a valid trade due to the fact that it has two touches right here, the first one and the second one, and also on the support level it has two touches. It's a valid trade, but it's not a high probability setup. What makes it a high probability setup is the fact that it comes from this larger structure here, and it comes from an insane impulse to the low and gave us a correction. That is what makes it a high probability setup. right? And as you may see, yes, it did respect not only the 90%, but it's still trickling lower. Right now it may be moving up, but it's still trickling, you know, lower, creating lower highs and lower lows. So that is the difference between a valid trade and a high probability trade. The 3-touch confirmation is a very powerful tool to use in your trading, and you know, taking valid trades in combination with higher time frame confirmations, I'm telling you, it will help you exponentially grow your equity. Your equity curve will definitely show as you backtest this and you apply it in your daily trading plan. So yeah, that will be all for today's video. I hope you took something valuable. I hope you took notes. Comment down below, what did you learn? What would you like to learn some more? And yeah, otherwise, hit the like button, subscribe, hit the notification bell, share this with your friends, and until next time, peace out.